Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Today we have Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, as our guest today. Jeff, thanks for coming in.
Always a pleasure, Brian.
Now, first, let's take a look at how crypto markets in the region are performing, and then we'll take a look at how regional stock markets are performing. Bitcoin is just above the 20,000 mark now. It's 20,584.6. It's down 6.83%. Ethereum is at 1,090.92. It's down 8.55%. Now, looking across the regional stock markets, the SGX is down 0.43%. Bursa Malaysia is down 1.5%. Shanghai is up 0.29%. ASX All Ordinaries is down 1.82%. The Nikkei is down 1.44%. The Hang Seng bucks the trend, it's up 1.03%. And rounding up the numbers, we've got the Kospi, which is down 0.46%. Now, Jeff, what's your view of market performance in the first half of the day?
Yeah, it's a little mixed. I think the fallout in Asia has been rather less because US index futures have rallied. So NASDAQ futures, for example, are up 1.4% today on no news whatsoever. I suspect it's just short covering. And the S&P futures are up around 0.8%. Chinese markets rallied after falling initially, and yet another very mysterious move to me. And we've seen this pattern repeated over the week. And I suspect that China's national team of state investors are around stabilizing markets there. But across the rest of the region, as you see, it's mostly a sea of red. Australia's down well over 2% today after the post-FOMC rally unceremoniously ended overnight in the US as a plethora of central banks, apart from the Fed, also hiked interest rates.
Now, I want to speak about that because the BOJ is maintaining its ultra-easy monetary policy. That's, as you said, a sharp contrast to its global peers, everything from the Fed to Bank of England to the Swiss National Bank. What's your view on this impact then on the yen?
Yeah, brave move by the Bank of Japan. I think that the market is still going to keep testing their nerves, frankly. We saw dollar yen rally. I mean, we saw dollar yen fall quite strongly below 133, I think to 132 overnight, as international investors started pricing in a chance that the BOJ might lift this 0.25% JGB cap. That didn't come to play, and we've seen an immediate reversal, and dollar yen's now approaching 134. I think the US-Japan rate differential is going to keep driving dollar yen, and they're going to keep testing the Bank of Japan on this front. And the path of least resistance is higher for dollar yen, and I expect to see that continuing now because the rest of the world is clearly diverging from Japan's monetary stance. The only positive Japan can really take is that inflation is still relatively benign there, so they can afford to keep doing this for a while, but eventually something has to break.
Speaking of rate differential, there is a rate differential also breaking out between Asian markets and the US. How do you see this playing out? Because obviously governments across ASEAN in particular are in a dilemma because prices are rising, the population is up in arms that the necessities are rising, yet they need to choke off demand by raising interest rates.
Yeah, this is a stagflationary environment where growth is slowing, but prices are rising. And when you're a central bank and you've let it get to this point, there are no good choices. And admittedly, a lot of this inflation is being caused by supply chain disruptions from China with their COVID zero. Of course, the Ukraine-Russia war is having a major impact on that. These are external factors they have not so much control over. You can either hike interest rates and possibly push the economy into a recession, or you can just leave everything alone. The cost of living blows out as inflation rises, which causes more of a negative feedback loop and protests from your populace. So it's not a good place for many central banks in the world to be in. I think for Asia, perhaps the main positive we can take here is that the inflation that we're seeing now is starting from a much lower point than what we're seeing in the developed countries of the Northern Hemisphere and say down in Australia and New Zealand. So they haven't had to hike as aggressively. But I think if inflation doesn't start peaking in places such as the United States, central banks in Asia will be forced to hike more than they want to protect their currencies.
Now, Jeff, in your commentary today, what are some of the other key things that you flagged that we perhaps should be aware of?
Well, I'm looking at Bitcoin, and I think we're running into the weekend, and as we know, things can get frisky in the crypto space in the weekends. It's sitting just above 20,000. Clearly, there's a few buyers sitting there ahead of 20,000 in Bitcoin, but I think things could get quite emotional for the crypto space if 20,000 breaks over the weekend.
Similarly, and I want to ask you about that. I want to stop you there and talk about support levels from a technical perspective. Where's the next support level? Because in a previous show, I mentioned that, I think you mentioned it was around the 19,000+, just under 20,000 as the next big support level. And then after that, obviously that's different. How are you calling it now?
To be honest, I think if we get through this 20,000, and if we look at the press over the last few days about 3 Arrows and Celsius, and there's clearly a lot of margin calls that are going to get triggered if 20,000 breaks. Now, whether those can be paid or not becomes a different story altogether. So we could get quite a violent move lower if 20,000 goes. The next technical support I have is around the $12,000 mark. So there's plenty of room there from a technical point of view for Bitcoin to accelerate lower. I don't think we've seen the worst of this yet. Bitcoin's never been tested in a rising inflation or a rising interest rate environment, and the crypto space is not really functioning very well in that respect at the moment. These returns that they've been talking about, 17-20%, they're magical, and if something's too good to be true, it always is. And I think that's what's coming home right now. The rest of the world's at 3, 5, 2%. How can you magically conjure up 17%, 20% returns in this crypto space? Who on earth in their right mind would pay 20% for financing? None of this makes sense. And I think we're approaching a reckoning in this DeFi space right now.
Now, Jeff, as always, thank you very much for taking your time to be on the show.
Always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thank you very much for tuning in.